Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All of that seems kind of moot in the context of maybe our government's going to shut down tonight at midnight when I'll be fast asleep.
That's still going on.
But Wendy Schiller, she joins us from Brown University, and we want to get some informed comments about how this might play out here. So, Wendy, I'm not sure if you're in the business of predicting shutdowns or not, but I'd love to get your perspective on just kind of how the whole process here is unwinding in Washington. We've got a couple of civilians, President-elect Trump and Elon Musk, right smack in the middle of the discussion in the news cycle. And I've got a president of the United States who I haven't heard anything from. So how's this developing?
Well, I think President Biden has ceded sort of the negotiating power of the Democrats to Hakeem Jeffries, who's the Democratic leader in the House of Representatives, and Chuck Schumer, senator from New York, who's still the majority leader of the United States Senate till January 3rd. So basically Biden said, you decide what our position will be, and I'll likely, sign it. So he ceded all of that negotiating power to them. And I think this is really important for everyone to remember. We have a bicameral legislature. The founders set it up this way on purpose. You have two institutions that have very different electoral incentives, very different internal structure, different terms of office. And we're seeing that play out right now. I mean, the Senate's just literally hanging out, waiting for the House to deliver something, and the Democrats control the Senate. So all of this is about, well, if it passes the House, it'll go through. Not so fast. The Democratic-controlled Senate will say, no, we're not going to pass it. So the Democrats have some risk here because they could be party to the shutdown the way the Republicans are. And since it's a divided government right now, it's really unclear for the voters, who are you actually going to blame? Right now, the Democrats have decided they're going to blame Elon Musk. They have made Musk a target of their communications, and you're starting to see a little bit of this creep into some of those Republicans who voted against the package yesterday.
I mean, we just had a story that came out on the Bloomberg terminal saying that House Speaker Mike Johnson is currently strategizing a way to rush a spending bill through the chamber to avoid a government shutdown ahead of that midnight deadline that we've been talking about. I do know that the longest government shutdown in recent history was in 2018 under the Trump administration. It lasted 35 days. If we were to enter into a government shutdown, how do people actually analyze and predict the longevity of how long it could last?
Well, if you're thinking Trump and Trump's strategy, you think, well, if we're going to go into a shutdown, let's shut it down till I get inaugurated. And then, of course, we'll open it back up because at that point, the Republicans will control the House and the Senate. So he'll have more sway. And he's willing to sort of live with the costs that are incurred. Usually, a shutdown of this length usually costs several $billions, not only in pay for federal employees, but for all sorts of disruptions to all sorts of services that the federal government provides to the economy. So you're going to see a cost here, but then Trump gets to be the hero by reopening the government on his terms. And I think that's the way he's thinking. The debt ceiling is the interesting question here because the Republicans who voted against this bill yesterday really voted against it because the debt ceiling extension ran through 2027 and basically gave Trump an unlimited checkbook. And they are deficit hawks. And even they were not willing to go there for Donald Trump. So there must be something that they're sensing about how they would face the voters again in 26 that says we don't want to be responsible for blowing up the federal debt and the deficit even more than it is.
I mean, we're sitting here in December. We're still about a month away from Inauguration Day. Paul and I were chatting earlier. How typical is it historically that we have the president-elect implementing and, weighing in on these things? Where is Biden and Harris in this conversation? Is this all typical?
I mean, it's we haven't had as much brinkmanship, let's say, in December with an election switch. We've certainly had brinkmanship with Ronald Reagan in December, with Barack Obama in December. So you've had sitting presidents have this issue. But the transition in power, I mean, it does really happen, right? I mean, you won the election, you're going to be president. But in terms of the Trump sway of the GOP, that's what we're talking about here, is that it is a wholly owned subsidiary of Donald Trump. But right now, we're seeing cracks in that coalition. And the question is, what's driving those cracks? Is it get rid of Elon Musk? Is it thinking that this is just a bridge too far in terms of federal spending? Or is it they think they'll get some political gain by shutting it down and reopening under Trump with more capital with a Republican-controlled House and Senate? We're just not getting any real signals from the Republicans that matter, meaning the ones that voted against the bill yesterday. But a shutdown is not a way to start an administration. No matter what Donald Trump thinks, it's disruptive. And he's got very high approval ratings now. I'm not sure those are going to go higher by inconveniencing a lot of people over the next couple of weeks.
Wendy, do some people in Washington on either side or both sides of the aisle, do they view President-elect Trump as maybe even a lame duck president? I don't really need to bend over backwards for this guy because he's only here for 4 years.
Well, certainly if you're a senator that was elected in 2024
Okay.
Or even 2022, you're thinking you're probably going to outlast Trump. But then again, lots of people thought Trump might not run again, get the nomination, and win again.
Right.
I just don't think you can underestimate Donald Trump's political power. But you have an economy that seems to be humming along in terms of growth.
Yep.
And the employment numbers are sort of okay, not disastrous or anything. But inflation is really sticky. And the question is, if there isn't a real change in people's perception of the economy by the summer, I think a lot of Trump's clout could diminish, even among his own base. And then you're looking at the next electoral cycle. So that is where separation of powers is really crucial here. It creates different incentives, and we're seeing those incentives play out right now.
Wendy, I'm curious, do you know the intricacies of what the potential financial implications could be for non-essential government workers? Do they get paid retroactively, or do they just go without pay?
Typically, Congress insists on passing a separate bill to authorize retroactive pay for federal employees that have been furloughed or not paid during a shutdown. So, it varies depending on the shutdown, depending on the Congress. You can see where most people would want to see people paid for work that they do. But if you're not working, then there could be an argument, well, you weren't working, so this is a bloat of the federal government, and we're not paying you for work that you didn't do. The problem with the Republican Party is that the federal government civilian force is large and diverse and spread out all across the country. So in every congressional district, there will be federal employees or people associated with the federal government that will lose income because of a shutdown. And those Congress people are going to hear from those employees. So this becomes very sticky if they don't agree to retroactively reimburse these employees. But remember, the reason that Donald Trump, quote unquote, caved in 2018 and reopened the government was that the FAA and air traffic controllers and sort of our TSA employees, all of that became very difficult for people who weren't getting paid and decided not to show up for work. And that clog in the economy is what pushed Trump to the table. And so that's why it's curious that he'd want to start his administration with another clog in the economy.
All right, Wendy, thank you so much. We appreciate that. Wendy Schiller, she's a professor at Brown University, and she is the interim director of the Watson Institute, joining us from Providence, Rhode Island, versus that Zoom thing. So again, I guess the initial deadline is going to be midnight tonight.
Right.
So we'll wake up tomorrow, and the government will either be open or not.
Right, I'll be asleep, like you.
Exactly.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Norah Mulinda sitting in for Alex Steele here today. I'm Paul Sweeney. We are streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast. We're also doing this whole live thing from the Bloomberg Interactive Broker Studio here in New York City. The government shutdown is a thing, and we kind of getting used to it, I guess. It seems to happen at least once a year these days. But let's put this whole thing in perspective and how the next several days might unfurl there. Christopher Smart joins us. He's a managing partner at Arbroath Group, and he's a former special assistant to the president for international economics, joining us from Boston via that Zoom thing. Hey, Chris, thanks so much for joining us here. I guess, again, we've all in this market become, I guess, kind of used to these threats of government shutdowns. What's a little bit different this time is we have a couple of civilians that are really weighing in and almost driving part of the conversation, that is President-elect Trump and Elon Musk really involved here. What do you make of that whole dynamic? Because that seems a little bit unique.
It seems very unique. I'm not sure we're supposed to add modifiers to unique, but it is a very different rhythm from the traditional government shutdown background music that many investors are are used to at this time of year, along with the Salvation Army bell ringers and anybody singing carols at your door. There is always the drama of when Congress will go home, will there be a budget, or will there be a continuing resolution, and what services may or may not get shut down for a few days. As you say, one big difference this time is we have a president-elect who's not really president, scuttling what had been agreed by all sides earlier this week. We have, as you say, a civilian, somebody who's not even headed for a government role, an official government role at least, who's also sort of driving the dynamics on social media that we haven't really seen anywhere in the past. And then I guess to me, the third thing is, from the market's perspective, there's one thing that the markets always hate, which is the debt limit debate that comes up from time to time and the threat of the United States defaulting here. The fact that President-elect Trump has sort of introduced this as one of his asks in the continuing resolution, or at least that's what it's been in the last 24 hours. We'll see how that evolves. But markets would love to see this thing go away. The problem is getting the math to work on that particular part of an already complicated bill becomes very, very difficult.
It feels like in markets, we have so many things to worry about right now. Honestly, my eyes are on so many different things right now, especially with this being a Fed week. But of course, this is a concern as we're thinking about the uncertainty that could be upcoming in this situation. What is the impact on markets here historically? Do we really care about a government shutdown in terms of the near term?
I think probably less so this time around. First of all, the sell-off that we've seen this week was squarely linked to the Fed's statements and more hawkish music coming from that part of Washington. If we were sort of really on the verge of a recession and you were worried that government spending would be cut off and government activity would tip the balance into a recession, then I think markets would be paying much closer attention to what's going on right now. But you have an economy that is on the margin running a little bit hotter than the Fed would like. And, from a macroeconomic perspective, a little bit of cooling, even if it comes from a shutdown, is probably not a bad thing overall. Obviously, from a governance perspective, from a predictability perspective, from a political perspective, it's never a good thing when you have it this kind of dynamic in the background. And I think the thing around these government shutdowns, is that once they happen, it's never clear if it's going to be a quick one or a long one. And once sides start digging in, this could go on well into the new year.
So again, we were just talking with one of our analysts at Bloomberg Intelligence who covers Washington policy, and he had raised his risk of a shutdown or odds of a shutdown to 40%. That's up from, I think, 20 or 30% just a day or two ago. My sense is you feel like it's maybe even higher than that here. What's the politics of a shutdown here? How would you view the politics of a shutdown that might go through the holidays?
Well, I'm not sure anybody benefits from a shutdown, but the question is always, can you blame the other person more? And obviously, I think at this stage, it looks like this has been a shutdown that's been triggered by Elon Musk and Donald Trump scuppering this late deal that the Republicans, Democrats had agreed to. Having said that, President Trump just won a big election. It's very easy for him to write the narrative that this is Washington insider backroom dealing that he is fighting against and has promised to eliminate in Washington. So I'm not sure. I think both sides feel like they've got the upper hand here, which I think, as you say, leads me to believe that the odds are maybe higher than 40%, although, these things tend to change very quickly from 1 hour to the next. It just doesn't seem to me that anybody's got a real reason to compromise at this stage. The one minor deadline that's coming up is actually the president's inauguration. Does he want to be sworn into office with the government still shut down? But between now and then, I'm not sure what's going to force one side or the other to come to the table.
When we're thinking about the market, what sectors in particular could be potentially exposed to the impact of a government shutdown?
Again, if it's shutting things down for a week or a month, even 2 months, the macroeconomic impact is fairly limited. Obviously, you can see government contracts that don't get written, maybe defense contracts that don't get done this year or get pushed into next year. You get a lot of uncertainty, that maybe some businesses aren't planning their investments the way they would like to, given the uncertainty around government spending. But the real questions are not so much around the shutdown itself as I think everybody is looking to both the tax debate that's going to come into line very quickly and what sort of differences they can expect in terms of corporate taxes and potential rollbacks of President Biden's subsidies to the automotive, to the electric vehicle, to the clean energy industry. And then the other piece of that, I think, that is driving things are the tariff wars that are building up.
Christopher Smart, thank you so much for joining us. Chris Smart, he's a managing partner at Arbroath Group, former special assistant to the president for international economics. Just giving us his thoughts here on the potential shutdown. I think, as Chris was just mentioning, he kind of feels like this is something that may come to fruition. So we'll have to see. We'll pay attention to that starting midnight tonight.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Norah Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out on youtube.com/Bloomberg Podcast. Again, like Charlie Pellet, I'm trying to figure out what the heck's going on in this market. What's driving it higher here? I'm seeing a couple things. Maybe, I'm looking at the top go on the Bloomberg terminal. Fed's favored inflation gauge cools to the slowest pace since May. So maybe this economic data, people are really starting to digest it and say, all right, maybe this inflation thing is not as concerning as maybe we thought, and that might give the Fed some room on the rates here. And I think the question is maybe the reaction to the Fed's meeting on Wednesday. Again, S&P off 2.5%, NASDAQ off 3.5%. Maybe that was a little bit of an overreaction.
We're seeing real estate the best performing sector today, and then information technology second best.
Real estate.
Yeah, that's my crew.
Real estate. All right, very good. We appreciate that. Sandi Bragar joins us. She's a chief client officer. I'm sure she's got some thoughts here. The firm is Aspiriant, and she joins us via Zoom. Sandi, what do you make of the last 4, 5, 6 days in this marketplace? We've got geopolitics, we've got domestic politics with the government shutdown, we've got the Federal Reserve. Boy, there's a lot of cross currents for investors to navigate.
Well, it's been an exciting week, and every day there is a new twist and turn. We've been telling our clients who are corporate executives, family business owners, and entrepreneurs to be ready for anything and to be thoughtfully diversified in their portfolios. That's what we've been doing for them. But in terms of the economy right now, things are looking pretty good in our estimation. We have a strong economy, strong corporate earnings. There are some wild cards out there that could change things. And I think we got a taste of some of those wild cards this week, especially in terms of the Fed's decision regarding interest rates and slowing down the pace there. So a lot of volatility within the week. We wouldn't be surprised if volatility continued into 2025. But at this point on our base case scenario, we're not expecting any major changes. We think things look good out there.
Sandi, you mentioned wild cards. There's so much volatility. Where are you guys staying? What do you like right now? And where are you avoiding?
So within our portfolios, as I was mentioning, we really truly believe that now more than ever, diversification is important. And we're pretty well balanced between bonds and equities, though tilting toward equities. Within the equity markets, we do like the U.S. market, particularly large cap value. It's really has not been the place to be for a long time. On balance, we think that there's some real opportunity there. We also like small caps in the United States, also on the value side, and really looking at the higher quality small companies, so companies that have strong balance sheets, that have great business models, that are going to do well during good economic times and bad. And then we do have some of our allocation overseas. We're particularly more bullish on Europe at this point, and also Japan.
When we look at the fact that we've hit so many record highs for the S&P 500 and the market more broadly this year, more than 50 times, is there any discussion around whether or not market valuations have been too high?
In our estimation, the U.S. large cap growth area is running pretty hot still. We think valuations are high there. When you look at the S&P 500 earnings, currently PE is at 22, an average is more like 16. So you could make some arguments that some stocks have gotten ahead of themselves. That's why we are tilting toward value in some of the areas of the market that haven't gotten as much play. But it all depends upon what happens in the economy and how corporate earnings continue in the period ahead. And again, without some of these wild cards coming into fruition, I talked about inflation, interest rates would be another wild card. And of course, we have deficits and tariffs out there as well. We could see sustained levels in the markets if those wild cards don't show their ugly faces and create some surprises.
And Sandi, since the election, at least from my perspective, there's been a palpable sense of optimism, economic optimism about the markets, optimism about taking risk. Do you get that when you talk to your clients?
So our clients are mostly based in the United States. We have some that are located overseas, and they represent all aspects of the political spectrum. And so what I've noticed, it's clients who have strong political views on one side of the spectrum or the other that are either the most bullish around the economy or the most concerned. So we're hearing a lot of different things from our clients, and our job really is to meet them where they are, keep in mind what they're trying to achieve with their long-term financial plans and what they're really focused on, and making sure that we're helping them make decisions about their portfolios that are going to be best in service of what they're trying to achieve, and keeping a check on any strong feelings one way or the other between bullishness or bearishness. We hear it all, Paul.
Sandi, one of the latest wild cards, of course, that we're monitoring and the rest of the market is monitoring today is the potential government shutdown. How have markets historically responded to government shutdowns, and what are you all thinking about what we're seeing today in about 30 seconds or less?
Norah, the shutdowns tend to be a non-market event and a non-economic event. So we've been telling clients who've been concerned not to worry about it. The interesting thing about this potential shutdown is that it really is an early test, perhaps, of the cohesiveness of the Republican Party. So if we were to see a prolonged shutdown, and that's not necessarily what we're expecting, but if we saw one, that could put into question some of the Republican Party's ability to rally around other policies that people are expecting to come into fruition, like tax reform later next year.
Sandi, thank you so much. We appreciate it. Thanks for your time. Sandi Bragar, Chief Client Officer, Aspiriant, giving us her thoughts on the markets.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.